G'day traders, Mindset Reset. Today we're talking about nailing and bailing. It's Free Cash Friday, and we had huge moves on Thursday, large moves on indexes, large moves on gold, huge moves on currency pairs, and then coming into Friday's session we had markets that had sort of stretched out on the indexes. They were making higher highs, not really set up in a nice consolidated pattern. They were setting up in somewhat of what could be construed as a parabolic template, but difficult to trade. And oil had a nice consolidation inside of peak formation from high of the week, day 3 longs in the market, and 3 levels of rise. Gold had made higher highs on the inside, and we had levels where the breakout took place yesterday in the New York session, as well as the low of the day. And it made a peak formation, vertical peak formation on the news release, which broke down for a 50 pip move at the end of the hour from 75 to the quarter level. So about 30 to 40 pips of tradable space, nail and bail type of opportunity, but a very suspicious type of market today. After big distended moves, there was a possibility we could have saw consolidations and then explosive moves, but didn't really see that. We saw vertical parabolics on NASDAQ, S&P last time I looked. Oil was a textbook move 3 levels down into the New York Open. Again, go back and study that video. The New York Open down low, took out the low of the day before reversing in the last 15 minutes, and then third hour going parabolic on top of the New York Open straight through the high of the day and collapsing back down into higher level longs. So a nail and bail type of market, and those conditions are the longer you're around trading, you'll start to get suspicious when markets start to behave in a certain way, slow, creeping, not collapsing, not exploding. And after yesterday's large moves, it's a way to lock in the money, get off the screen. They can be dangerous types of markets that can just chop and then move back into consolidation later in the session and close out into the weekend. Markets that are making higher highs are difficult to trade sometimes because you're chasing the high inside. And so coming back to your psychology is having a plan, narrowing it down to 1 or 2 markets. There were lots of markets that potentially could have been setting up. So we had Euro Oz, Pound Oz up high. They could have continued to move higher and consolidated for a vertical collapse for 25 to 50 pips, maybe second or third hour. That did not eventuate. They kind of pushed higher, but not really, textbook best trade setup templates. The yen cross pairs though, we had big Bank of Japan movement during the London session, or during the my overnight. They were making higher highs and higher lows. After a huge move, you see big spikes in the market. What you want to do is redraw your highs and lows. Let the market establish a consolidation and then develop a thesis from that. Yen pairs, in retrospect, looking back, they were probably the better, easier pairs to trade. First bounce after the news, and then continuation into the third hour news release that just kept pushing higher yen, euro yen, and pound yen. Now we'll do a video on this later, but I'm going to talk about, again, there's a lot of confusion about how to identify a best candidate with 3 levels. And 3 levels is where you will get your textbook opportunities in Asia, London, and New York for parabolics. And it's about establishing a basket for the Asian session, a basket of instruments that will offer an Asian parabolic, maybe only 1 trade a week and maybe 50 pips, but it's a sizable opportunity for a 50 pip parabolic move. Same thing goes for London. So instead of trying to trade the escalator, it's about understanding how a parabolic trade setup will develop and evolve, and how those are powerful, because when they go vertical, those are the opportunities that you can size into. So again, it's not about trying to guess a direction and be in the right direction of a move. I'm looking for a market that's made 3 levels of drop or rise and is about to go parabolic, whether that's just for a session trade like on oil, or if it's a 3-day setup for a parabolic opportunity for 50, 75, maybe 100 pips or more. Pound New Zealand can be on, we saw one on the Canadian dollar, we saw them on the New Zealand dollar. And again, it comes back to understanding the opening range and initial balance, day 1, day 2, and then we're looking for a day 3 parabolic opportunity when they may be breaking out of the range or reversing out of a opening range breakout, whatever that setup may be when it eventuates. But a fantastic opportunity in oil today for a session trade. scalp down, for second hour scalp down, New York Open reversal, third hour parabolic, and a scalp at the high of the day, the high of the week, inside of the peak formation, the high of the week for a reversal into higher level shorts. Nail and bail, I probably took one trade too many, but it was a good trade. It was a good session. Take the money and run. Beautiful sunny hot day here. We'll get into this parabolic, the 3-level parabolics again. I'm gonna, there's a lot of videos on it already, but obviously there's traders still asking a lot of the repeating questions. You need to go back. There's a whole playbook playlist section on that, and it's important not just to go through these videos, but really pay attention. Timings, levels, behavior of price. If you master that, everything else will come together and make sense. So keep it simple, traders. Enjoy your Free Cash Friday. Have a great day, traders, and may the markets go with you.